What's up, YouTube? It's your boy Steve with Printer Gang Investments, man. Back with another video. So today we had Jerome Powell come on, talk, and he was surprisingly dovish. And the market rolled up in the close. And if you watch it to the end, we actually sold off, but that's another subject. We're gonna watch my boy Jeffrey Gunlock react. Let's see what he's saying.
Bring in Jeffrey Gunlock now, the CEO, CIO, co-founder of Double Line Capital. Jeffrey, it's good to see you. Welcome back.
Nice to be back on Fed Day, Scott.
Yep, and it's good to have you. First and foremost, your reaction to what we just saw.
Well, I think you just said the most important word, which was unlikely. Unlikely the next policy move will be a hike. And he went quite out of his way to make it sound like
Most important statement of the day for anyone watching the market. Jay Powell told us it is very unlikely that the next policy move will be a hike, which is quite a contrast from what everybody was screaming last week when they was not last week, the week before, when they was scared and we was talking about it's gonna be 7 rate hikes and the market wanted to sell out them 6 days in a row. So this is very good. Coming up with the earnings being decent. We had McDonald's, Starbucks missing, DoorDash just missed, so a lot of consumer-facing brands missing. But, the tech stocks is turning out good as far as the AI trade. But let's keep watching.
they're not contemplating a hike at all based upon the data that's come out, even though he's being a little bit disingenuous by claiming that inflation is below 3%. Remember back at Jackson Hole in 2022, I think it was, we came up with supercore inflation, supercore CPI, supercore PCE, and supercore PCE, which is excluding food, energy, and housing, is up 3.3% year over year. And what no one wants to talk about is supercore CPI is up 4.8% year over year. In fact, the CPI for the first quarter here in 2024 at year end was projected to be 2.7 on an annualized basis. Instead, it's 3.5 year over year on the headline. So it almost feels to me like he's hoping that the inflation data comes down without a rate hike. And I guess he feels that the lack of progress, as he framed it, during the first quarter is going to be transitory. So we'll see. With oil prices at $80 a barrel, I'm not really sure we're going to see the inflation numbers come down in a sustainable way below 3%, particularly not on the core numbers. So
I ain't gonna lie, I kind of agree with him on that now. With oil prices the way they is, how's they gonna get inflation down, man? We've been having them hot readings. It's not working for all my regular people. Y'all see what's going on in the stores. My boy's kind of scary, pal. And to be honest, can you blame him? I mean, it's got the market propped up, for the day. It was kind of good news for the market, but is inflation really coming down the way Jay Powell says it's coming down? Because we all remember what happened last time my dog said it was transitory. But anyway, let's keep going.
The markets, as you correctly pointed out, love this because there was fear of a lurch toward some suggestion of maybe contemplating a rate hike. And that absolutely did not happen. And so you just saw everything go vertical to the upside. Stocks went up a lot, junk bonds went up a lot. I mean, we had corporate bonds and emerging market bonds down earlier in the day, and they're now significantly in the green. So this is.
Now, he said something very real. And shout out, I believe it was Tom Lee, whichever analyst said this a few weeks ago. Investors have just been freaking out with these rate cuts and rate hikes all year. Like, 1 week they want to price in 7 rate hikes. Then earlier we had 7 rate cuts priced in. Now it's 3. Now they're saying, I don't know if it's going to be 3. Like, bro, just do your DD and buy the stock you want to buy and ignore the noise. Understand if your stock is going to be affected by the macro environment. We see what's going on with Tesla, certain banks. You know what I'm saying? But, like, sometimes you just gotta ignore the noise. But I feel him though. We're gonna keep going.
This is a interesting thing because the big pivot that started everybody getting happier was November 1st. And interestingly, rates are up a little bit since then, but not very much since then. So we've basically had rates go up and then come back down and then go back up again. We've definitely been in a trading range for the fixed income markets and more recently, sort of the equity markets as well. And this meeting and this press conference suggests to me that that's going to be sustained.
It certainly sounded like I guess we could say, a not yet chair versus a not at all chair, at least when it comes to rate cuts. I want to note going in that Goldman is still sticking to its view of 2 cuts because they say the 2 pillars of disinflation are intact, those being lagging housing data and the fact that we don't have any more supply shocks. I'm curious as to what your take is now. When do we get the first cut and how many will we get this year?
It seems unlikely that we're going to get 3. That was in the Fed's dot plot back in March. I actually, based on what we're seeing in the inflation market and commodity prices, which have been weak recently, but they're pretty much at their 200-day moving average. Oil is up. I kind of feel that the base case now is 1 rate hike for this year.
Cut.
And I certainly don't think it's...
You mean cut?
Sorry, yeah, cut. Yeah.
Freudian. It's a Freudian.
See how they got my guys going back and forth, man. Cut, hike. But I like his view. It's a little more conservative. 1, maybe 2. And the way I see it is when they come, they come. And as an investor, as a trader, I look at it like, hey, any price we buying at before those rate hikes come, rate cuts. Look at me doing the same thing. Any price we can buy at before these rate cuts come, if we did the DD and we in the right stock, it should be a price you wish you had once those rate cuts come, man. So I like the way they're setting us up in the earnings. I'm liking, we still got the rest of the week to play out. Don't get it twisted. We still got the rest of the week to play out. But I like the way we coming in the earnings like this. We still got a few more reports to see. We're going to check back on Friday and hopefully Palantir do their thing on Monday for all my Palantir investors. And then we got to see what NVIDIA is going to do. And let's just keep watching these earnings, man. Let's just keep watching these earnings. It's been crazy so far. We had Starbucks miss, McDonald's down, DoorDash down. Like, we got a lot of consumer-facing brands missing and going down, and that's saying something about the economy. So, we just going to pay attention to all that. But, Jerome Powell said what he said today, and it helped the market out, at least temporarily. It's your boy Steve from Printer Gang Investments. I'm going to be back later on with another video, man. I'm out.